5 minutes, that's all it took. Today, one single post from Donald Trump moved the S&P 500 more than 2%, even 3. And when we are looking at this Nasdaq, look, we just bounced over 3.5%, and TZS, look, in 5 minutes yesterday, bam, just in 5 minutes, yes, the same, more than 3.5%. ES futures exploded, oil crashed, billions of dollars changed hands in the time it takes to make a coffee. I've been trading futures for 6 years right now, and I've traded through COVID, I've traded through tariffs wars, I've traded through Fed pivots, and I have never seen anything like what happened just this Monday 23rd March. And in this video I'm going to break down exactly what happened, why it happened, and what most people are getting wrong about it, and most importantly what it means for you as a trader going forward. Because this candle is not just a simple candle. This is a market telling you something very important about where we are headed. Alright, so let me take you through the timeline of what happened just this Monday 23rd March. Because when you see it laid out, you'll understand why this was so extreme. So for that, let's rewind to Saturday. Trump posts on Truth Social that he will obliterate Iran's power plants if they don't reopen the Strait of Hormuz within 48 hours. That's a direct threat to energy infrastructure in the middle of an active military conflict. The Strait of Hormuz, for those who don't know, is where roughly 20% of the world's oil supply normally passes through. Iran has been blocking it since the war started, and oil prices have been going through the roof. Brent was trending above $110 a barrel. The entire global economy was feeling the pressure. So, heading into Monday morning, everyone was bracing for escalation. And when you are looking at these futures, they were pointing lower. We can even see over there from Sunday to Monday, we just got a gap down, and it just shows you that we anticipated an escalation of all these tensions. And then early Monday morning, Trump drops another post. He says the US and Iran have had, and I'm paraphrasing, very good and productive conversations about a full resolution of hostilities. And he's ordering the military to postpone all strikes on Iran's energy infrastructure for 5 days while talks continue. And his market reaction was instantaneous. Dow futures surged over 1,000 points within minutes, and ES ripped more than 3.5%, less than 5 minutes, guys. Oil just collapsed. Let's take a look at this oil. Yeah, so he did just the opposite of what the risk assets did. And this speed of that move, especially to the upside on the risk assets on the US indices, is what makes it historic. We are not talking about a gradual grind higher over a session. We are talking about one of the most violent short squeezes and risk-on reversals I've personally ever witnessed. And now here's where it gets really interesting. And this is the part that most people are going to miss. Literally hours after Trump's post, Iran Foreign Ministry came out and denied absolutely everything. They said there have been no direct or indirect talks with the United States, and none. So they say Trump was simply trying to manipulate energy markets and escape the quagmire. Iran's parliament speaker, who Trump apparently claimed was the contact, also denied any negotiations had taken place. So let me ask you this. The market just moved about more than 3.5% in only 5 minutes based on one social media post. And the other side is saying it didn't even happen. That should make every trader stop and think. And now I'm not here to give you a political opinion. I don't care about the politics. What I care about are the markets implications. And here's what it tells us. First, the market is desperate for de-escalation. The speed and magnitude of that reaction shows you how much pain was building underneath. Shorts were peeling in, edges were getting expensive, and the moment there was even a hint of relief, everything unwound violently. Second, we are now in a market regime where one post on social media can move trillions of dollars. And that's insane. And that's the reality of trading in 2026. If you are not monitoring geopolitical headlines in real time, you are flying blind. Third, and this is a big one, the underlying problem has not been solved. The Strait of Hormuz is still effectively closed. Oil is still elevated, look at this on this daily chart. And Iran is still saying they won't negotiate until the military offensive stops. Israel is still striking Tehran. And this 5-day pause on energy strikes doesn't change any of that. So was this really real? Or was it just a dead cat bounce on a headline that may not even accurate? That's a $1 million question, and it's the reason I'm making this video today. So let me zoom out and show you the bigger picture, because if you understand the macro chain driving this market right now, everything becomes clearer. And right now there's one chart that controls absolutely everything, and it's not the S&P 500, neither the Nasdaq, but it's oil. And when you overlay oil and this S&P 500 over the last 3 weeks, the inverse correlation is almost perfect. Oil up over there, look, and stocks just going down. Oil is going down over there at the end. So look at yesterday, for example, and stocks is going up. And yesterday, so this Monday, 23rd March, was a perfect example. Oil just crashed about 7% and equities just exploded. So the macro chain is very simple. If oil goes up, energy costs rise, inflation increases, central banks cannot cut rates, and growth slows, stocks go down. Everything is starting from these oil charts and oil prices. And the opposite, if oil goes down, inflation pressure eases, rate cuts come back on the table, risk appetite returns, and stocks go up. And that's it. That's the entire market right now in only 2 sentences. And you see the same patterns in the dollar. When oil rises, the dollar strengthens. Okay, you can see over there when oil just exploded, bam, this dollar just strengthens too and going to the upside. When oil drops, the dollar weakens. Same thing with treasury yields, same thing with gold, which is currently behaving more like a risk asset than a safe haven. And this is why, as a trader, even if you only trade ES futures, you absolutely must have oil on your screen right now, because ES is not trading on earnings, it's not trading on technicals, it's trading on oil, and oil is trading on geopolitics. So now the key question going forward, does this 5-day pause actually lead to a deal, or does it expire on Friday with no progress? And we are right back to where we started, or worse. And I'll tell you what I think, and I want to be clear. This is my personal analysis, not financial advice. Alright, so I think the market is just pricing in a best case scenario right now. A resolution, a reopening of the strait, and oil back below $80. Let's take a look again. So just this oil is pricing right now $89, $90. But when I look at Iran's public statements, and when I look at the fact that they are denying talks even happened, when I look at the fact that Israel is still bombing Tehran as we speak, I think the probability of a clean resolution within 5 days is really, really low and not enough. Which means this rally could easily be faded, and that's what is happening right now. So now, obviously, I could be wrong. Maybe there's a backdoor channel and a deal gets down, markets would rip higher, but as a trader, my job is to assess probabilities and not hope for outcomes. Alright, so what do you actually do with all of this? So let me give you the framework I'm using to navigate this environment. Because whether you are a scalper, swing trader, investor, or even just watching your portfolio, this applies to you. Number one, watch the 5-day clock. Trump's pause expires on Friday. That means we have 5 trading days where every headline, every statement, every leak about US-Iran talks is going to move the market. And treat every day this week as a potential binary event. Number 2, oil is your leading indicator. Don't watch the S&P to know where the S&P is going, but watch oil. If oil starts creeping back above 95, 96, $100, that's your signal that the de-escalation narrative is fading and risk off is coming back. Number 3, size down and widen your stops. This is not a normal market. We just saw a 2% move in only 5 minutes. If you are using your normal position sizing and tight stops, you will get destroyed by the volatility. Reduce your size, give your trades room to breathe. The VIX is above 30. Let's take a look at the VIX too. So yeah, yesterday he priced about 31 and now we are just surrounding this 26. So he's pretty close about this 30 on this VIX. So we are in a high volatility context, which means when we have a high volatility, the risk assets and the US indices tends to price lower. And that tells you everything about the environment we are in. Number 4, don't trade every headline. This is the hardest one, because when Trump posts something, when Iran responds, when oil spikes, the temptation to jump into the market is immediately, we want, because we are the markets crackheads. But most of these moves reverse partially within minutes, and you never know what is going to happen. So the edge is not in reacting, but the edge is in waiting for the markets to show you its hand after the initial chaos settles. And number 5, think in scenarios and not predictions. I have my base case that is rarely gets faded, but I also have my alternative case that a real deal materializes and we rip to a new highs. So just like that, breaking this trend line and going higher, breaking the daily thin lines over there. So the point is, I'm not married to either outcome. I have levels, I have a plan for both. So if we're going to the downside and or upside, and that's what separates a trader from a gambler. And now I want to end this video with something bigger, because days like yesterday, like this Monday, don't just test your trading skills, but they test even your mindset. 6 years ago, when I started trading, a day like yesterday, this Monday, would have destroyed me, for sure. Or I would have either frozen and done nothing, or I would have panic bought at the top of that candle and then watched it reverse. And what I've learned over the years is that the moments where the market moves the fastest are usually the perfect moments where you should be thinking the slowest. So speed kills in trading. Not always, but in moments of extreme volatility driven by geopolitical headlines. The traders who win are the ones who take a breath, zoom out, and ask what has actually changed. And today, what actually changed? The Strait of Hormuz is still blocked? Oil is still elevated? What changed is the narrative, but not the context. And narratives shift fast, but fundamentals shift slowly. So my challenge to you is this. The next time you see a massive candle, the next time you see X going completely crazy, the next time everyone is screaming that you need to buy or sell right now, pause. Just pause. Ask yourself what has actually changed in the real world and make your decision from there. And that's the edge, not speed. Clarity. And guys, if this breakdown gave you a perspective that you didn't get anywhere else today, do me a favor, please. Do me a favor. Hit the subscribe button because I'm gonna post a lot of trading content and trading entertainment too on this YouTube channel. This YouTube channel is going to be massive, so if you don't want to miss absolutely nothing, subscribe, activate the ring, the bell for the notification. Don't forget to put a thumbs up. And I'm posting macro breakdowns, real trade analysis, and mindset content every week on this channel, and soon every day. So this is a kind of market where having someone who cuts through the noise matters, and that's what I'm trying to build here. And if you want to trade futures market in this kind of environment, I would recommend checking out Phidias Prop Firms because it's the best prop firm in the world. They offer swing trading accounts, and I did a video about swing trading, especially on futures market, because it's such underrated, which means you can hold positions overnight, and in market driven by geopolitical headlines that drop at 6 a.m, that's a massive advantage. And for that you need a code, and that's why I use the FLT code, best code ever at checkout to get the available discount. And we are in live, and I'm trading every single day in live stream on the Phidias Prop Firm YouTube channel. So if you are curious, or if you want to watch me trading and enjoying the time, having fun, everything in live, go to the Phidias Prop Firm YouTube channel. Link is in description, and I'm going to be following the situation very closely this week. So if the Iran talks develop or collapse, I might drop an update video. So make sure you're subscribed so you don't miss it. Thanks for watching. Trade safe. Take care. See you in the next one. Bye bye bye.
Yo, his name is Florian. He's the NASDAQ hustler. Every day he's grinding, making all them numbers cluster. He's a day trader, living life as a thrill seeker. Analyzing charts, he's the Wall Street sneaker. 9 to 5 ain't his game, it's the stock market flow. Tickers on his mind, watching those numbers grow. Buy low, sell high, that's the name of